What is good, traders? My name is Matt. I've been in this market for almost 8 years now, man. Ain't that crazy to think about? I just turned 23, right? About 6 years ago, I got into actually trading options. 2 years ago, got into futures, and truthfully, throughout all that time, it took me a long time to figure it out, right? So today, I want to shed a lot of light onto this deceptive industry. I don't really want to name any names, but I am because it's just sick to me. It makes me sick. Justin Whelan and TGR are both exposed to scammers, both huge followings, and it's sad because they're misleading our generation, right? So huge shout out to I'm in Trading. Go check out his video on his channel, man. But that's not what this video is about, man. Today we're going to go from start to finish on how I make about $1,000 every single day with less than 1 hour of work. Before we get into it, I want to show y'all my data for Q1 of 2026. As you can see, we are in profit of around $18,000 at a 61% win rate, profit factor 1.34. And this is over the course of about 700, 800 trades. So it's not like I'm cherry picking the data. This is every trade I've taken from the beginning of the year, excluding evaluations. Now, I'm not gonna lie or act like this Tradezella is a broker statement. So let's bring up my current fundeds. As you can see, I got 3 PA accounts, copy trading them, and they all got about $2,000 worth of profit in them. With that out of the way, let's lay out how this video is going to go down, right? So first, we're going to go over prop firms and the realistic income per account that you can make month to month. Once we're familiarized with this, it's on to passing the evaluations, which is going to be completely different to trading our fundeds. Next topics will apply to our fundeds, risk reward, risk management, that type of stuff, and then we'll finish off with our method of entry. Alright, so you're new to futures and you want to know how much you can realistically make trading. Now, you can go the old-fashioned route and fund a live account, which I wouldn't really recommend, especially for new traders. Or you go the other option, the safer route with less risk, and trade a reputable prop firm. First thing you want to do is understand our rules, right? So each prop firm is going to be different. Make sure you do your research. Currently, I'm trading Apex, so their evaluations are 1 day to pass. They do have a 50% consistency now. There's a bunch of new rules to Apex, so I'm not going to go over right now. But make sure you really, really know what you're trading. For now, we're going to assume that you have passed your evaluation and you have activated your funded account. The only rule that we really need to focus on is our drawdown. So for our 50K Apex accounts, that gives us a drawdown of $2,500. The question now is, how are we going to manage this risk? To keep it simple, we want to give ourselves room to take some losses. So the way I go about this is to go through my data and recognize the amount of consistent red days that I have in a row. Personally, 2 red days is not out of the cards. So right off the bat, I know that my risk can be no more than $1,000 per trade. But that's not going to give us enough room to work with, right? So typically, I'll cut that in half again and risk about $500 per trade. If you do not have any data to base this decision off of, what I would recommend you do is to simply just divide your drawdown by 10. That'll give you 10 trades to work with, and that should give you plenty of time to build up the data to make more educated decisions. Next, we want to find some personal data, that being our win rate and our average risk reward. So for our example here, I'm going to pull my data from Tradezella, which is a 60% win rate with a risk reward of about 1:1. Lastly, we're going to know how many trading days are in a month on average. That is about 20, right? So let's get into the math. We want to find out how many days are green and how many days are red. To do this, we take 20, the amount of trading days in a month, and multiply it by our win rate. That'll give us 12 winning days The other side of that will be 8 red losing days. Next is our numbers, right? Given that we're risking about $400 per trade using a 1-to-1, the math comes out to $4,800 in profit and $3,200 in losses. We'll subtract these values for total profit, leaving us about $1,600 a month per account. Now, that may not sound like much, but considering our cost of funding is about $100, $150, that is almost a 10x. That is more than a 10x return on our investment. Evals. Let's talk about our evals. So, first thing we need to understand is these do not matter at all. They are not real accounts. There's no money in them. It is a sim account. There's nothing real about it. They're not there to prove consistency to the prop firm. They're there so that there's another buffer so that the props can make money off of you, right? So remove all attachment, remove all care, anything related to these accounts. It does not matter at all. Our goal here is to pass the account. We do not want to be wasting time, setups, or emotional energy during the evaluation phase. So I thought I'd include a pretty simple news strategy to help you guys pass these. There are 3 specific events we want to focus on, that being NFP, CPI, and PPI. The reason we want to utilize these news events is because normal market volatility is elevated, and we can take advantage of this by passing accounts in one trade, one day, right? Now, the first thing we want to do when we're doing this is to come over to our Forex Factory or any economic calendar of your choice, obviously, right? We're going to go to filters, and we're going to go find USD. We're going to uncheck everything but that, as well as all of these unimportant folders. Bang, filter that. Moving on, we need to know when these events occur, right? So you should already be checking news in the morning, but if you haven't, I'll give you a quick rundown. The majority of high impact news happens around 8:30 or 10 o'clock. NFP, CPI, and PPI are all at 8:30. So what this means is this allows us to implement this news strategy without conflict to our intraday trades or our session trades. Now, there's one important thing to know and find out if you don't know. It's the rules about news relating to your specific prop that you're trading. So the prop I use allows me to trade any news without restrictions. I know there's a few prop firms that don't allow you to enter within 2 minutes before or after the event. So just make sure that the prop you're using allows you to implement this. Now, it doesn't take a rocket scientist to realize this is a 50-50 coin flip. Even if you're invested heavily into the fundamental side of the market, you've probably noticed that the market does not care about the data, but rather the reaction from current market participants. You see, data could come out great, but it might not have met expectations, therefore resulting in a sell-off and vice versa. Generally, I run longs, and let me tell you why. First, we need to understand what we are trading. News, right? News is the data that represents the state of our economy. So simply put, if we can recognize it's a coin flip trade based on data representing our economy, unless something is horribly wrong and has been for many months already, why should we short and bet against America? So with all that laid out, we have our evals ready. We know we have to be on the charts before 8:30. How are we going to actually trade this release? So coming into 8:25, we have to already have determined market structure and our high time frame draws on liquidity. Generally, these are going to be overnight highs and lows, as well as any other prominent high time frame levels. Next step is to start our position. Initially, I'm going to start off with 2 to 4 ES mini contracts. For the majority of 50K accounts, our profit target is going to be around $3,000. So after you've set take profits, determine if you have enough leverage for that move. Remember, 15 points holding 4 cons will pass the account. You don't need to overdo it with 10 contracts. Now, you may have noticed I haven't mentioned anything about stop losses, and that's because we're going to be utilizing the most amount of drawdown that we can. If you have a daily loss limit, we're going to be utilizing that. If you don't, we're going to be utilizing the entire account. This trade is meant to be passed or blown. Now, there's a few reasons why. This is solely for the evaluations, by the way. First, news is volatile, right? A lot of the times it'll fake out to the one side and continue to the other. We don't want to get shaken out during that. Second, we're here to pass the evaluation phase. We're here to get our funded. We aren't here to prove consistency or discipline. We've already done that. We've already proved that to ourselves. I always like to say the cost of funding needs to be viewed as an expense to your business. These eval accounts are nothing more than that. All right, on to risk to reward. What if I were to tell you, you get to choose how consistent your trading is? You get to choose your win rate. Does that sound too good to be true? Well, it all starts out with your risk to reward. You see, risk to reward directly affects the volatility of your equity curve. A high risk to reward creates large swings in your P&L, keeping you in a boom and bust cycle. On the other hand, a low risk to reward smooths out and keeps your equity curve stable, creating more consistent growth with less emotional drain. So what's the math behind winning? Traders always ask what's more important, win rate or risk to reward. It's actually neither one, but the relationship between both. The whole idea is expectancy. The purpose of a trader is to have a positive expectancy over a specific group of trades. Basic statistics will say that if you flip a coin 100 times, half the time it'll land on heads. So how can we apply this to trading? If we take any strategy, a 1-to-1 risk to reward, and we back test it for 100 trades, statistically 50 trades will be winners and you will already be a break-even trader. Your only job now is to find some sort of edge that gives you that extra 5% to become profitable. As you can see in our chart here, the higher our risk to reward, the lower our win rate needed to become profitable. Trading a 1 to 3, you only need a 30% win rate, which sounds great until you go through a series of 6 to 7 losses and you think something's wrong with your system or strategy, but the reality is that's just the simple math behind it. You're losing 7 out of 10 trades. Most traders can't handle frequent losses. It leads to a lack of confidence, adjustment in risk or strategy, keeping the traders inconsistent. You need to understand how winning affects your mentals. When you're winning, your brain floods with dopamine and boosts confidence, which keeps us focused and motivated. Trading is hard as it is. You're not a robot. Emotions will dictate your performance. A low risk reward equals a high win rate. A high win rate builds more confidence. Confidence in oneself will create discipline, and discipline to do the right thing as a trader will create consistency. Your risk approach should work with the human psychology, not against it. Finally, the juice. This is what you're here for, boys. Our method of entry. This will be quick because it's not overcomplicated. I actually simplified it quite a bit for this video. But it's called the opening range break, or break and retest. We're going to be utilizing volatile market open moves to scalp a 1-to-1, right? This trade is quick, so we need to have our daily loss limit in place, and that'll just stop us from doing anything stupid. Moving on to the steps, boys. Step number 1, mark prominent highs and lows. Enough said with that. You just go to the 1-hour chart and start marking shit, right? Step number 2, at 9:30, we're going to mark the opening print. This is our line in the sand, okay? This will visualize order flow a bit. Not always, but typically above the opening print, bulls are in control. And below the opening print, bears are in control. Pretty easy concept to understand, right? Step number 3, mark the 5-minute opening range. So that's going to be simply just the first 5-minute candle. We're going to want to create a fat little box here. And what I like to do is anything inside here is a no trade zone, okay? No trades allowed. Have to be outside this range. Step number 4 is to enter on the break of the range. Our second entry is on the retest. So For today, kind of a mid setup for this strategy. However, if you managed it well, should have been a stop out at break even. Personally, I took the 1 minute opening range break, so I wasn't involved on this 15 minute orb setup. However, this is mid action. So this is yesterday's setup, and the reason I bring this one up is because it is much more enticing of a setup to get in on. So as you can see on this candle, we had a break of the range. This is a valid entry, and I'm not gonna lie, I think I took this. The best entry is this retest right here, which gave us a nice continuation. Sell on this exhaustion candle right here. I mean, pretty simple. Not much more you need. Step number 5, set your take profit and your stop loss at a 1-to-1 risk reward, or targeting overnight targets. Finally, step number 6 is to close the damn charts and repeat it tomorrow. Alright? Now, obviously, I take other information into account. For example, level 2 data, time and sales, ESNQ divergences, volume profile reactions, etc. But at its simplest form, this is the strategy that's made me over 18 grand in the last 2.5 months. That's all I got for you, really. Huge shout out to you, bro, for sticking around till the end. Trade safe, man. I hope to see you in the next one.